Should you buy Alibaba, ticker symbol BA? It's been absolutely hammered since the problems it's had with the Chinese government. This time in November, it was around about its all-time high at $320 a share and is now at $140. And these are levels that have not been seen since basically 2019. This is the low it's been in 2 years. So is this stock a buy? What we're going to do is look at the fundamentals of the stock and then have a discounted free cash flow and Buffett Graham intrinsic value model to work out the fair value of the stock to see if it's still a buy. But let's quickly look at the fundamentals. So as I said, Alibaba has a market cap of 470 billion. It has a share price of $140 a share, and this was the 52-week lows and highs of 138 and 280. And if we just go into the number one, is the PE ratio less than the market. Yes, Alibaba has quite a low PE ratio. It is 20 compared to the market, which is 28.5. Can get a like on the video as well. Really helps me out. Now, is the revenue increasing? Yes, it is. Gone from 60 billion to 127 billion. So that's almost doubled. Excellent news. What about profit? Is that a similar story? 13 billion to 19. Not as massive, but this is an e-commerce company. So the revenue has doubled, but the profit not so much, but still increasing massively. Are they buying back their shares? No, 2.5 billion to 2.7. So that means they've been issuing more shares and diluting shareholders, which is not great. Next is the free cash flow increasing. Yes, it is 15 billion to almost 27. So if we just look at that, that is 4 passes, and it has a free cash flow ratio, which is the market cap divided by the free cash flow, and that gives a free cash flow ratio around 17.5, which is lower than the PE ratio, but they are pretty tightly correlated, which is a good sign. So this is suggesting that the stock is undervalued at its current price. Next, we're going to look at the two models. So I've calculated the future free cash flows. This is based on the estimated analyst revenues that are coming through, and this is calculated the future cash flows and then creates a terminal value, which brings it back to today. So what would discounted free cash flow say about the stock? Well, actually, they would say it is at a massive downgrade, undervalued right now. They would say that the price is $311 a share, which means it's 120% discount, which may sound a bit extreme, but when you see that that was actually the price it was this time in November, so definitely achievable and has previously been at that point. Next, you want to look at the Buffett Graham intrinsic value. This takes earnings per share and expected growth into account. And if we see what that gives us, that actually gives a fair value of $95 and a Graham price of 71. Now, the reason for this is this very low expected growth rate. Analysts have it as an expected growth rate for the next 5 years as 1.45%. I'm guessing this is due to the issues with the Chinese government. But if we look at what it would be for the next year, which is 16.4, and if we just put that in the model, around about 16%, that would once again say the Graham price and the fair value are way above the stock price right now, has a fair value of $340 a share and a Graham price of $255, which would mean that the stock is a buy. So analysts are being a bit reserved in terms of the expected growth rates, but if it did continue how it has been, the stock would be undervalued and was definitely fairly valued at its all-time high this time 6 months ago. So both of the models are really liking the stock, but I just want to have a quickly look at some of the technicals and see if it's a buy technically. But I think fundamentally, despite the issues with the Chinese government, this is still a solid stock. If this was an American company, I can imagine it would be a lot more than $140 a share. But what we're going to do now is look at the moving averages and the technicals. So what I'm going to do is I've got a 50-day moving average in yellow. I'm going to add a 100-day in yellow, sorry, the 50 days in green, and finally the 200-day in red. So let me just add that in here. And what we want to see is, well, basically what the issues were with the stock. So you can see both. So technically on the moving averages, this is a very negative trend. The faster moving averages or the shorter moving averages are below the longer moving average, and you can see that the price was below it, jumped back up, which is a bullish sign again, but then dropped below again when they missed earnings. As you can see here, they missed earnings by about 5%. So then this has dropped below again, which is obviously massive negative bearish news. So now if we just quickly go to the next one, which is the MACD. This is the moving average convergence divergence, and what you want to see here is this to be in the positive. So the MACD lines have switched, and another negative thing here is the MACD line went from positive to negative. So it was originally just over 0.3, and now is currently at around about minus 3.5. So if we were looking here before, this is when it's crossed buy signal. Another buy signal here when it's crossed above the 0 line, the signal line and MACD line crossed. They crossed above the 0 line as well, which is bullish. And then this is negative as well. So according to MACD, then you would ideally want to short this stock. The last thing I want to look at is the RSI, which is the Relative Strength Index. I imagine the stock is going to be in oversold regions. Yes, it is. But if we go back, the stock has just been consistently in oversold regions the entire time. If it has jumped up, that would be probably a sell signal with the general bullish sentiment on the stock. So technicals are saying that it's not a buy, but fundamentally this is still a very strong stock. People were interested in buying it at 320, so right now it's at a massive discount if you think it can go back to that price. But yeah, the models say it's a buy, technicals say hold off, but fundamentally this stock is very solid. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, comment on your thoughts down below, and subscribe if you're not already, and I'll catch you guys next time.